Good morning and welcome, all traders, friends, family, for futures, Forex. It's time for the market forecast for Monday, March the 15th. I'm John Hoagland. As always, thanks for trusting me with your time. As always, we're going to look at these markets in context through the lens of risk management. Just starting to have a little bit of wrestling with keeping the charts stable, but I assure you we will get through this. Good morning to everybody. It's a cold start here for this week in Chicago. We're back in the 20s and 30s, looking for maybe 3 inches of snow. I thought maybe we were through all that, but maybe not. And hopefully you changed your clocks this weekend. Yes, or made arrangements so you're ready for the trading day today. Of course, we moved our clocks forward this weekend. As far as economic news this morning, the Empire State Manufacturing Index came out considerably better than they were expected. That's good news for manufacturing in the great state of New York. The manufacturing index is now at an 8-month high, so that's all, of course, good news. We have a pretty busy week of economic numbers this morning. The Empire State, of course, this morning we have a couple of bill auctions, a 3-month and a 6-month bill auction today, and then 3 o'clock, right as we are getting ready to close the Treasury International Capital. Not expected to be a big mover here. Tuesday, we've got retail sales, import-export, Red Book, industrial productions, business inventories, housing market index, 4-week, 8-week bill auctions, and a 20-year bond auction Tuesday, starting at 10 o'clock for those first two, and at noon for the 20-year bond auction. The FOMC meeting, of course, starts on Tuesday. We'll be looking forward to seeing what they have to say on Wednesday afternoon at 1 p.m. Central. But before that, the housing starts and permits at 7:30. And then, of course, the Fed chair presser after the release of anything that they're going to be changing. Not expecting to be changing anything, but we never know. We have jobless claims as usual on Thursday at 7:30. Also, the Philly Fed Manufacturing Index at the same time. Misleading indicators at 9 o'clock, and EIA natural gas report. Lots of bill and note announcements on Thursday. And then Friday, there's really no major information, no major economic numbers due out. However, it is quadruple witching. That means that futures index, options on futures, they're all going to be expiring. Now, I see that we've got a question here already on whether we should be changing to the June or still trade the March contract. In the S&Ps, the June contract has more volume. If it's not quite that way in the Nasdaq or the other indices yet, it will be by the end of the day. You're fine changing to June if you haven't already started in March. If you've already started in March, you're fine staying there as well. Make sure you like, share, comment, question, feedback, and heckling are always welcome. Over the weekend, Treasury Secretary Yellen quoted on national news stating that she doesn't feel inflation is a significant risk. Of course, they believe that they have the tools to manage it if it does become an issue. We'll see if the FOMC agrees with that on Wednesday. U.S. stocks is ready to open here, steady to lower to start the week, with the Dow putting up a new all-time high in the overnight activity. Bitcoin-focused stocks are going to be the hot topic today, as the Bitcoin has risen up to 61,000 over the weekend. Is that right? Doesn't seem possible. Crude prices remain range-bound as rollover is scheduled for Wednesday. So Wednesday we'll be looking at the volume to see if the April contract has more or if we should move to the May contract. Every time I think of May crude oil, I think of the expiration last year in the May contract, which was when crude oil traded below zero. If they say it can't go to zero, don't believe them. As we go into this week, of course, headline risks are always present. Anything that comes out that is unknown can drastically affect markets, and this can happen at any time. So please make sure you protect yourself. Always use stops. VIX up a little bit this morning at 2151. Dollar index up also a little bit this morning at 91.83. And the 10-year yield up at 1.62%. Keeps creeping up higher. As always, like to say good morning to everybody. Good morning, Ralph, Felix, Clarence, my brother Rick. How are you? Bill, good to see you. Murph, John, Taurus Trader, let's all give this. Well, thank you very much, Taurus Trader. We do like the likes, and we like to know that as you know that we're doing right by you. If you have suggestions, those are always important to us here at Top Step. Feedback is how we grow. Good morning, Will. Good morning, Brian. Kevin Scott. Now that's an hour earlier for you, Kevin. Markets, kind of tied to Chicago or the U.S.-based time. Andre, good morning. Taurus, again, that question. I'm trading June. If I was trading the Nasdaq, I probably would be trading June because I'm firmly expecting the volume to way usurp the March contract in the June contract today. Good morning, Shady Trady. Kevin Scott. Good morning, Nico. Murph. Did I see Art W? Art, you were asking about the Discord. It just go to Discord and look up Top Step. It's a public site there, so you can just go in there and join. We'll look forward to seeing you there. Jonathan, James, Laura, Ashton, Magnum, Art W. Looking forward to seeing you in that Discord. Thanks everyone. I make sure this is great. Kind of feels like a family in a way. Well, that's the goal. I mean, that's everybody that I work with, everybody that I meet along the way in trading. I kind of consider a family member. So, yes, good. Thank you for the kind comments, Taurus Trader. Always appreciated. Tim, Steve, Patrick, Michael, Trading Research, Ednelson, good morning. Oleg, I put in a chart for life support. Yeah, I don't know why. It just seems to be happening just like right before I go on for the market forecast, and then I'll probably wrestle with it a couple of times as we go through the charts, but we'll get through it all. Troy, good morning. Sharon, Jason, Josh, A-Sun, good morning to you as well. Joseph, Adam, Art W. Okay, cool. Yeah, just to go to Discord and look up Top Step. Let me know if you have trouble with that. Bruce, Payne, Suki, good morning. Anybody new to the market forecast, welcome. We're glad that you're here. We're going to take a look at the charts here, and it's just a second and see what we're looking at for just to get the week started here. Mondays are typically not my best trading days. I'm taking it slow this morning, and I'm not seeing that there's any real urgency as far as opportunities, at least in the last 5 minutes since I've started yammering. So let me get the charts up here, and then we'll dive in. Again, my apologies for this. I don't know why it continues to happen, and it just seems to be happening randomly. Last week we were pretty solid all week long, and now we're just kind of having those issues again. So why don't we jump in here, and we've got them running now, as always, starting with the daily and crude. Let's see what we've got here. Okay, this is going to be the 30-minute chart where we've had a pretty decent push in the last hour or so to the downside here. Let's again start at the daily. What are we looking at? Well, we've got a pretty decent rollover range, really kind of established here. I'm going to call that range $64 to about 66.40, 66.50. Just kind of leaving this shadow at the top of this candlestick as kind of outside the area of balance. We're going to be kind of focusing on balance extremes, and right now we're pretty much right in the middle of this area of balance. And with rollover coming, I'm going to be thinking that our bigger, stronger traders, the ones that really move these markets, are going to be looking more at getting a cheap rollover. So they're going to leave directional activity largely to shorter time frame traders, which means some of those short time frame levels may be better or more likely to be respected. So here we are. We've opened with a gap. We've got 36.80 as our weekly kickoff low. Took a look below it a couple of times last week with no real success of acceptance. Where are we now? Well, we've got to move to the downside here. We've got Thursday's low. What I'm more focused on here is Wednesday's point of control, which is basically 64.45. This is going to be obvious visual level for this market to try and reach to. Again, we do have a gap. If we can't close that gap relatively early, I'm going to be looking for an opportunity to see an execution, perhaps down. Well, this point of control is one. Weekly kickoff low 63.80 is another one. We had an 8,800 contract increase in open interest on Friday. We didn't go anywhere. Rollover related. People legging in and out of contracts that they're going to be moving from the April contract to forward contracts. So again, focusing more on shorter time frame levels, looking for markets, looking for the price to respect those shorter time frame levels as long as we stay range bound. Again, that's between $64 and $63.80, the weekly kickoff low here, and up to $66.40 as the range above. I'm going to stay patient here. All right, with FOMC, we've got, a lot of focus is going to be on what they're going to say, what they're going to do, if they're going to do anything. A lot of folks just kind of probably for the next couple of sessions here, looking to balance their hedges. If you're a longer term trader, you don't want to take any huge risk on an FOMC day. So you're going to basically be kind of hedging your portfolio. We finally got an all-time high in the regular trading hour session, just barely eking out the high from back here on the 16th of February. So we don't have to worry about that. But the market still just seems to be continuing to want to push higher. We added 50,000 in open interest on Friday. Again, probably largely rollover related. People are still moving those contracts from June to March. Pretty decent volume. That open interest again is going to be blurred by rollover. FOMC balancing his hedge and hedging is what I'm really kind of looking for the next few sessions. And there go the charts. Down goes Frazier. And we are back. There we go. So to look now at the 30-minute chart to see what kind of opportunities we may be looking at, obviously our overnight high is going to be an important level for us to be able to see and to reach today. Our overnight high is pretty much just shy of the all-time high, which did again happen in the regular trading hour session. So overnight high is definitely on my radar for a potential opportunity, but I'm going to have to try and stay patient. We don't have any overnight inventory. Settlement is right here at 39.32 even, or 39.32.75, I should say. Are we going to be opening with a gap or are we not? If we open with a gap and can't close it, I'll look for a test of the overnight high as well as the all-time high, and it's again, kind of a day where I'm going to try and stay relatively patient, even if we open with a gap. I think that there's going to be better trade locations as the day goes on. Again, with no overnight inventory, it kind of tells me, all right, well, we're kind of right where we left off on Friday, and I'm going to be looking for opportunities. Remember, it is a long week, lots of data coming out. There's going to be a lot of opportunity today. Don't go searching. Don't go looking for trades. Let those trades come to you. Overnight high and low are my high target areas. Why? Well, we've got value high from Friday, value low from Thursday. We've got our all-time high from Thursday. We've got our overnight high very close to that. My focus is largely going to be, are we going to reject range and put in another new high today? We could certainly do that. Or are we going to come back in here and reaccept range value from Friday? If that's the case, then we may see a move back down to value low. Again, lots of traders looking for opportunities to hedge themselves for anything that may or may not happen on Wednesday. All right, Nasdaq. Same but different, as always. Nasdaq, we've got an inside day, inside an inside day, and extended trading hours. Market's finding balance. Basically, the market is finding balance, possibly because a lot of traders are choosing to hedge in front of the FOMC meeting. We added 17,000 in open interest. That's overall open interest on Friday. Again, there's that rollover blur again. We can't really see any directional activity. It was an inside day, and now we've got another inside day, inside an inside day. Third day of balance. The kind of balance areas, I'm kind of looking at 13,048 at the high, 13,048. That's going to be the high of this candle bar here, and these lows here, right around 12,785. So inside that, I'm going to try and stay patient. What does it look like on the 30-minute chart? No overnight inventory. We're basically right here. Market's now looking like they're going to probably be opening higher. They were higher earlier. Took a little look to the downside. Looks like everything's going to be looking higher on the open. But again, if we do open that with a gap and we can't close the gap, then I'll look for opportunities to get up to the last week's high. If we close the gap and if we get back into range and value from Friday, I'll look for a move back down here. But again, I'm not in any big hurry. Mondays are typically not my best. If you are of that group, just stay patient. Let the market come to you. If you miss something early, don't worry about it. Don't feel bad. Don't get mad. Just be patient. Wait for the market to offer you another cheap opportunity. Why are we looking at cheap opportunities? Because cheap opportunities offer, there go the charts, cheap opportunities offer the chance to get into a position that may be worth a lot more than the risk you have to take to get in it. Back to the charts. So I think we're through with the Nasdaq, looking now into gold. We've got about 11 minutes. I think we're in good pace here to be ready for the open. Gold, digestion off recent highs, kind of falling into some degree of balance here. Still kind of an upward ting to it. FOMC balance. How much is the FOMC going to be affecting gold? It's always unknown. We had a pretty good boost in volume on Friday as we took a look to the downside and rejected that. We lost 1,300 in open interest, so it's not like we had a whole bunch of money coming in either direction on Friday. Pretty narrow range for the overnight here. We've opened. The opening range was very wide. It took forever to kind of break out outside of the opening range. So again, no help. A little bit higher volume off that rejection lower on Friday, but the open interest is not helpful for us. Take a look. We got some overnight longs in this market. We've got settlement right here at $17,019.8, $1,719.80. I think I'm still talking about the Nasdaq. So we are going to be opening with a gap in gold. Again, if we cannot close that gap relatively early, I'll look for this market to head towards, last week's highs are right in the neighborhood. We're at risk of kind of taking those out already. So I'm going to be watching. Again, staying patient. I think our overnight high is a very interesting area to look for an opportunity. Back down to settlement / overnight low / point of control. If this market does come back in and reaccept inside of value from Friday, this is a perfect day for repair. If we get back and accept inside value, I'm going to be watching to see if this market can't come all the way back down to value area low from Friday. Could be very interesting for us. All right, so now we are on to the euro and the 10-year. Downside structure still remains good here in the euro. Dollar's up a little bit, so the euro's off a little bit. It's an inside day in extended trading hours. but the price is really kind of central inside weekly kickoff range. So that's telling me we're, again, probably more likely, more short time frame controlled than longer time frame. Again, with the FOMC, who knows how that's going to be affecting this. Settlement all the way up here at 119.73. We've got some overnight shorts in this market. The market has opened. It's opened inside Friday's overall range, but outside of value. If we continue to accept outside of value, I firmly expect this market to continue the move to the downside. We've got to see if we can have some weaker hands sellers that have the conviction to hold with these positions. And of course, if we see longer, stronger sellers come into this market, they'll continue to get paid. If that does not happen, we may get a nice pullback back towards settlement. And that's kind of what we look for when we are thinking and looking at these overnight inventories. Okay, price moved away from settlement. Shorter hands traders probably continuing to push this, trying to push this market lower. If it doesn't happen, those shorter hands traders aren't going to be holding those positions for very long. They're probably going to be out today. And that might bring buyers back into this market, back up to settlement and to the 10-year. All right, so the overnight low here is testing the low for the last 2 weeks. We still see the yield kind of creeping higher. You know, looking at it just before the forecast this morning, it was up around 1.62. That 1.15 seems to be the magic number. And now I'm going to reopen my magic charts. I don't know why it just does this so randomly. I've got probably a gremlin or something I've got to exercise here. So, yield again, you know, it's back above 1.6. We got 131.23 on the low end here. That's our overnight low. That's the low from Friday. It's the low from a week ago Friday. Lots of, you know, potential support here, but the more often we get to this level, the more likely we may exhaust the buyers down here. And of course, a lot of that, you know, is depending on how are our longer time traders going to be hedging themselves for Wednesday. So here's a pretty good example. You know, Friday we opened with a gap. We couldn't close the gap relatively early. That puts us in the idea that we're looking for shorts. We're looking for opportunities to go with the gap, which paid pretty nicely on Friday. Again, we've got last Friday, this Friday, our overnight low, very close together. Settlement is right here, 131 and 25, 30 seconds. And we're right basically in the middle of the range here. I'm really going to try and stay patient. I'd love to have an opportunity to get an execution down at our overnight low here. Our overnight high here also looks relatively interesting, kind of in balance, out of balance. Try and stay patient again in this. We did add 90,000 in open interest on this move to the downside, which may indicate some potential new selling coming into this market as rates continue to leak, if you will, higher. All right. So I've got a couple of comments here. Guido, thank you for coming. Thanks for joining me. And you can trade the June contract and NQ today. By the end of the day, I'm confident that the volume will be far greater in the March contract in the June M contract than in the March H contract. I would be trading the June today. Deg, good to see you. Charles, Angelina, hey Keith, good to see you. Real one. And Kia, 13,000 level as strong as Lacey messing with the charts. Yeah, no, she's quiet. She's curled up looking out the back door. She's being a good girl today. Art W, I'm sorry if you were unable to find that Discord channel. I will try and find out and send you an email or something and see if I can't get you in there. I've got a couple other folks here looking for the ability to get into our Discord channel, and I will work on that for you. Watch the recap today. Dan may have that information for you, and I'll try and have it again for you tomorrow morning. Edward. Yes, Magnum. I pray that I trade well this week with the same patience that Hogue has during these disappearing charts. It's so aggravating. I don't know what it is, Magnum. And again, it was a great interview. Thank you for sharing that with all of us. Bulldozer, a little late here to the show. Not a rush for me. It's Monday. Absolutely. You helped me to remember not to overthink this. Trading levels is something I've been working on. Thank you for sharing. Excellent. Guido, you're welcome. All right. Let's take our deep breath. Stay humble, grateful, and creative in your trading today. Looking forward to an interesting week. Don't forget we've got lots of economic data due out, including the FOMC meeting on Wednesday. Looking forward to seeing you all again tomorrow at the Coach's Playbook, and lots of good stuff coming up. So get out there. Profit. Have a great trading day. Stay patient. Let the market come to you. And I will see you tomorrow for the market forecast. Make sure you see Dan today at 3 o'clock for the market recap. And we'll see you soon. Have a great trading day.